Hey guys, what is happening, and welcome to this video. Good morning to you. It is around 6 a.m. here in Mexico. The sun is just about to come up. It's about the coolest part of the day right now, so I thought I'd make some videos because, hey, guess what? The camera overheats. So in this video, we're answering a question that is very complex, although it seems on the surface level like a simple question. When is the housing market going to crash? So without further ado, guys, let's do this. Alright guys, welcome back. So when is the housing market going to crash? It sounds like a seemingly simple question, doesn't it, to answer, but it's dependent on many different factors. So the thing is, we can all monitor these factors ourselves. Now, the number one factor I believe that people need to watch is unemployment. Unemployment is linked to housing. When people are unemployed, they have to sell their home. They have a reason that means that they have to sell their home. And when people have to sell their home, they'll often take a loss on it if they can afford to even take a loss on it, or they might even end up losing it to the bank. Now, this changes the dynamic to the housing market and it makes it totally different. So it's something that you need to monitor. Now, I believe by the end of this year, we're going to start to see unemployment rising as we enter into a recession. The reason why unemployment is going to rise is because corporate bankruptcies are going to rise. So businesses are going to essentially go bust and people are going to become unemployed as a result of that. Now, it doesn't take a genius to work out what happens because, you know, if you're in a situation where rates are very high and people become unemployed, the real estate market could very well be a liquid like it is getting right now. And we are at the very, very beginning of the end of a real estate cycle right now. So essentially, you've got the fact that real estate prices are declining nationwide. Real estate prices are also declining in the US now. They're a little bit behind Canada in terms of their rate hikes, but it's also catching up to them. The 30-year mortgage in the United States has absolutely soared. The cost of home ownership has absolutely soared. Now, a lot of people would say, well, you know, that means that a lot of people are locked out. That's not a good thing. Home affordability is worse than it was last year. But in actual fact, the thing is, prices lag far behind the rate increases. So right now, people are looking at it and thinking, I'm never going to be able to afford a home. It's an absolute disaster. But the real truth to that is, it's going to take time for those prices to fall and everything to bleed out of the system. Now, the thing is, which is very important to remember, is real estate is a slow-moving ship. And I've said this before. It's not going to move in just a second. It's going to take time to move. And within that, it's not just going to go straight down either. You're going to have points where it goes up and points where it goes down even further, just like in stocks. Now, that makes people very nervous, but it's the facts. Things don't go down in a straight line. And there will be points in which people are in denial and they think now is a good time to buy. There's a little more activity, it can possibly drive prices up, and then people get FOMO again, and you kind of get this action that happens, and it's all the cycle of real estate, as we've discussed on live streams before. So the thing is, it's a complex question because it's not one that I can put a date or a number on it, because it's dependent on many different things happening. When the unemployment starts rising, when defaults start rising, that's really when you're going to see the dynamic shift. The fact is, guys, people here in Canada are extremely over leveraged, and you know that is not a good thing because that puts you at more risk of default. You see, the thing is, people who are over leveraged, who have withdrew from home equity lines of credit, who have refinanced their home for more money, are at extreme risk of default, especially if they locked in a fixed rate and then they come to refinance. And guess what? Rates are way, way higher. They're house poor. Inflation has gone up loads and literally destroyed their purchasing power, and their income as real wage growth is insanely negative right now. And you know, that's a big issue. It's a big issue for the central bank, and it's something that's not being addressed right now. You see, your central planners and central bankers think that negative wages are a good thing. That just goes to show how out of touch they are with reality. The fact is, real negative wages are such a bad thing economically. With inflation running as high as it is, it creates kind of this loop where businesses can't pass on the costs to their consumers, and then they can't put up people's wages by the real rate of inflation. So people end up falling further and further behind in terms of their wages. We're just at the beginnings of this happening. You know, inflation cycles, they don't typically last a year, and they don't typically just stop after a year. You know, really, inflation is a psychological thing. And what you really want to do, if you really want to learn more about inflation, I can suggest that you go and learn about countries that have had high inflation. There is a lot of different countries over the past 20 years that have had massive bursts of high inflation, and you can learn about the psyche of people during those inflationary cycles, and then you can understand why these cycles go on much longer than people think. So this inflation cycle that we're in, I believe, is not going to be over. It is not transitory. We may see disinflation, which means inflation just goes down slightly. But then even with disinflation, you normally see it pick back up. Like during the 1970s, if I throw up a chart, you can see that inflation went up and down and up and down, but it never went below zero. So the thing is, inflation was still rising throughout. You just had periods where inflation was going down. Now, it's going to be interesting to see what central banks do faced with that. The thing is, we've just seen inflation go higher and higher and higher. Energy prices just keep going higher and higher and higher. And the fact is, if I'm here in Mexico right now, and food prices are insanely cheap, guys. So food prices, they haven't actually risen that much, but what has risen is the logistical cost of delivering that food to you. To summarize, will the housing market crash? When will the housing market crash? It depends. That's the real answer. Nobody can say exactly when it's going to crash, but all you can say is it's going to really be dependent on a few things happening. Rates need to hold high, and you need to see unemployment. Two things which are absolutely disastrous for the economy. And we are going to be heading into a recession. Those things are likely going to stick around because of high inflation. And the fact is, guys, even if the central bank drops rates, you may not see mortgage rates drop because of the extremely high level of inflation that we have. And that is the real thing that people don't really understand. And I know you guys understand because we've covered it on previous live streams. We're going to cover it on other future live streams. So if you want to be a part of that, hit the notification bell below, turn on all notifications so you get notified when we next go live. But the thing is, when we talk about how the central bank doesn't control interest rates, that's when you really learn that they don't. So it's an open market system. I do not believe that we're going to see quantitative easing again, at least in countries like Canada, the United Kingdom, places like that. I believe central banks have put themselves in an incredibly difficult position, and we are just at the start of this inflationary cycle. So it is not over yet, and there is going to be disastrous consequences for people who try and buy the dip in real estate. They haven't realized that it looks like the probabilities are that we're heading into a real estate downtrend now. And like I said, guys, it will go up and down, up and down. It's not going to go down in a straight line. Anyway, guys, if you enjoyed this, please like the video to support the channel. It's going to help these videos get pushed out to more people. Thank you so much for watching, and I will see you guys in the next video. Peace.